Do you think it's possible for Tesla to eventually be unavailable to investors? Star investor Cathie Wood is extremely optimistic about Tesla stock regardless of countless issues and roadblocks. Where will Tesla stock be in the coming months and years? Well, Wood seems to have an idea, and you better not miss this one. We think that gas-powered vehicles are going to be obsolete within the next 5 to 10 years, and the traditional auto industry has to figure out a way to migrate into electric vehicles, said Cathie Wood in a Yahoo Finance interview. Get extra $10 cash. Open an account and deposit any amount on Moomoo. It's a limited bonus for celebrating Moomoo's 10th anniversary. Check the link below. Moomoo is a great platform to trade stocks with many unique, easy-to-use tools. I think a lot of you will find it really helpful, especially if you want to be more hands-on with your investments. For example, find out the right time to buy and sell stocks. Link in the description below. Wood and her firm, ARK Invest, seem to be on a Tesla buying spree. In October alone, ARK Invest bought Tesla shares twice. Once in early October after Tesla announced Q3 production and delivery numbers, and once again around mid-October after Tesla's Q3 earnings call. In early October, Wood purchased 132,000 Tesla shares after Tesla reported a miss in deliveries when Tesla announced its delivery and production numbers through a press release. For the second time in October, Wood bought another 66,190 Tesla shares after the stock fell following Tesla's Q3 report. During the first half of November, Cathie Wood's ARK Invest loaded up on Tesla shares in its Innovation, Next Generation Internet, and Autonomous Technology and Robots ETFs several days ago. ARK's Innovation ETF bought 27,594 shares in the second week of November, while the Next Gen Internet and Autonomous Tech and Robots ETFs gained 2,909 shares and 9,173 shares respectively. It appears that Wood and her firm ARK Invest are loading up on Tesla stock while the stock experiences a dip. This is probably because Wood believes that Tesla stock will soar sky high in the next few years, so she is taking the chance to buy more stocks while it is cheap. In a late September statement by ARK Invest CEO Cathie Wood, she said that she is standing by her bullish bets on Tesla. "We stand by all of them," Wood said when asked about her opinion on Tesla, Roku, and Bitcoin. In a Yahoo Finance interview, ARK's CEO Cathie Wood emphasized their belief that gas-powered vehicles are going to be obsolete within the next 5 to 10 years, and the traditional auto industry has to figure out a way to migrate to electric vehicles. In mid-October, another ARK executive expressed optimism about the leading EV company. During a CNBC Squawk Box interview, ARK Invest CFA Tasha Keeney shared the reason for ARK's positive stance on Tesla. Keeney said, "Electric vehicles are just single-digit percentage points of overall auto sales, so we have to remember that it's still an early market. But we do definitely see Tesla as one of the market leaders both in electric vehicles and in autonomy." ARK's 2021 open-source Tesla model has since been updated due to material changes, including autonomous ride-hail assumptions and inputs, capital efficiency estimates, and the forecast has been pushed forward by 1 year to 2026. According to ARK, Tesla's prospective robotaxi business line is a key driver by contributing 60% of expected value and more than half of expected EBITDA, or earnings before interest, taxes, depreciation, and amortization in 2026. Across the simulation set, they expect electric vehicles to constitute 57% of the company's revenue in 2026, although at substantially lower margins than the robotaxi revenue. Because of ARK's increased conviction in Tesla's ability to achieve full self-driving, they have to be updated with how the robotaxi business feeds into the model. Although in the past, they predicted that Tesla will never be able to launch autonomous ride-hailing, recent positive innovations from Tesla made them change their mind and assume its launch in 2026, 4 years later than Musk expected. They also suggest that Tesla will commercialize autonomous ride-hailing in 2024. However, in 9% of their model cases, Tesla does not commercialize robotaxis within the 5-year window. If and only if robotaxi commercializes within the forecast window, the modeled financial results for Tesla are susceptible to the year of launch. ARK Invest's updated model also increases Tesla's capital efficiency. Tesla's capital expenditure per incremental unit of capacity had improved from around $84,000 in 2017, when the Model 3 was ramping up, to around $7,700. In last year's model, they estimated that Tesla would spend $6,000 to $8,000 per incremental unit of capacity in 2025. Given its much better than expected capital efficiency, it may be safe to assume that Tesla will spend $2,000 to $7,000 per incremental unit of capacity in 2026. ARK's price target for Tesla is $4,600 per share in 2026, with the updates in their recent model. The bear and bull cases suggest that Tesla could be worth roughly $2,900 and $5,800 per share in 2026. If this happens, Tesla stock will be impossible to buy for any average American and will only be affordable to institutional investors. Institutional investors do not use their own money, but rather they invest the money of others on their behalf. Retail investors, on the other hand, are investing for themselves, often in brokerage or retirement accounts. The ARK Invest team also pointed out that they expect Tesla's robotaxi to be a game changer for the company. By 2026, if Tesla successfully launches robotaxis, the expected value is the average of all 1 million simulations. Said simulations are highly sensitive to the year when Tesla finally launched robotaxis. In most of ARK's lowest price per share scenarios, Tesla launches a vertically integrated, human-driven ride-hail service but does not launch a robotaxi network, while in other scenarios, Tesla does not launch either service. While the company has not committed publicly to launching human-driven ride-hail, ARK detailed previously the strategic and tactical advantages of doing so. Importantly, human-driven ride-hail could become a profitable recurring revenue stream before Tesla launches a fully autonomous service. For cases in which Tesla launches a human-driven ride-hail service and solves for fully autonomous driving, ARK assumes that its human-driven ride-hail cars will transition to the autonomous ride-hail network over time. If it is unable to launch a robotaxi service within 5 years, Tesla still could launch a human-driven ride-hail vehicle while trying to solve for full autonomy. On the other hand, in ARK's many higher price per share scenarios, Tesla launches a robotaxi network in the next 2 to 3 years. In a published article, ARK Invest stated that, although tuned to our expectation for 2026, we believe our Tesla model is methodologically conservative. We assume that Tesla's stock will trade like a mature company rather than a high-growth one in 2026. Even billionaire investor Ron Barron remains bullish on Tesla and in fact sees big opportunities amidst market chaos. Moreover, Goldman Sachs is staying bullish on Tesla stock despite a sharp sell-off in recent months. We believe that Tesla, given its leadership position in EVs, including its vertical integration and tight coupling of hardware and software, as well as its ecosystem of charging stations and brand, and its focus on clean transportation more broadly, given its solar and storage businesses, will be best positioned to capitalize on the long-term shift to EVs. Goldman Sachs analyst wrote in a new paper looking at winners from the shift to autonomous driving. In mid-October, Goldman reiterated a buy rating on Tesla shares with a $305 price target, which assumes about a 45% upside from the current levels. Analysts said, "We expect Tesla to expand margins in the medium term as it ramps up the important Model Y product, as well as new factories in Berlin, Germany, and Austin, Texas, and in the long term as it increases its mix of software revenue." Tesla's stock is almost always in the news because not only is the company popular, but it also has grown to be one of the most valuable businesses in the world. Even after a relatively large sell-off in 2022, Tesla is still the 6th most valuable company in the entire world. Tesla CEO Elon Musk was reportedly the richest man in the world as of November 2022, in large part, although not exclusively, due to Tesla's success. Although the average analyst rating on Tesla stock is buy, predictions for the company's future stock price vary exponentially. In fact, Tesla stock price predictions are more variable than with nearly any other company in the S&P 500, in large part because of the boom or bust mentality many have about the company. Bullish analysts and investors believe that Tesla will continue to take the leading role in the electric vehicle revolution that has finally gained traction. They also believe that Tesla will lead in other green energy fields such as solar panels and energy storage devices. Bearish analysts and investors, on the other hand, feel that the company will fail to live up to expectations and will just become another production company rather than something innovative and special. Bears view the company as overvalued, susceptible to competition, and overly subsidized. That said, Tesla's stock price targets show considerable variation. The average 12-month price target for Tesla stands at $302.05 according to NASDAQ, which is a significant 53% above its current valuation. However, the most bullish 12-month forecast for Tesla stock stands at an incredible $760, or a whopping 285% above its current price. Meanwhile, the most negative analyst covering Tesla sees shares dropping to $73 within 12 months, representing an equally incredible prediction for a 63% loss. Overall, there's a wide variation within the investment community as to the near-term future of Tesla. Subscribe to this channel and have a great time watching.